folks, welcome back to another episode of Bricks and Mortar TV. Chris and Adrian from Harcourt Sargent. Adrian, Mad March is here. Let's get down to what's happening in our local marketplace. So first and foremost, folks, as you're probably aware, Adrian, interest rate cut yesterday off the back of a lot of talk and media hype around the coronavirus. What do you think that means for us in our marketplace locally?
Yeah, it's certainly a hot topic at the moment, that coronavirus, Chris. I think it's certainly going to have some positive as well as some serious negative effects. Now, the negative effects mainly will be a lot of the investment coming out of the Chinese or the China background.
Yep.
So a lot of those students coming from China,
yep.
Also investors coming from China,
yep.
will be heavily restricted.
Yep.
The positive being that it will be a high demand from local buyers.
Sure.
So therefore, I think it's going to have a lot of positive and negative effects.
Definitely. So for our local marketplace, do we deal with a lot of Chinese investors and buyers predominantly? I mean, we've got Mawson Lakes University there. A lot of Chinese students would go there. Perhaps we might see the investment come off the burn a little bit, I guess, in terms of what the Chinese buyers were buying for their kids in apartment style, very simplistic, low maintenance and walking distance to the uni. What about any other areas do you think it'll affect the Chinese investment?
Well, I honestly don't think it's going to affect our market, and that's ranging from the Tea Tree Gully all the way through Playford and Burton and so forth. So we probably deal with 95% of the other buyer, being the Vietnamese, Nepalese and the Middle Eastern, as well as the Australian buyer. Being that property value is well under $1 million, so therefore I don't think this Chinese epidemic will really affect our market.
Most certainly. I think for us, as I said, the University of Mawson Lakes gets a good attendance from Chinese students. Might affect mum and dad maybe investing into apartments or off the plan stuff there. Moving up the hill to Tea Tree Gully, where we typically see a Chinese buyer come into the mix is maybe around that Spring Hill, Golden Grove region, where the buyer's spending in excess of $1 million. Obviously, they're very cash influential economy and buyer type. But like you said, 95+% of our buyers are sort of that mid-range buyer or entry-level buyer, first home buyers or your blue, white collar mums and dads that are dealing with that medium average price and home in the area. So that's good to note, mate. Let's talk about, obviously, what's happening in Adelaide at the moment in terms of average days on markets for property to sell and the median price.
Yeah, okay, great. Average days on market at the moment is 54 days.
Okay.
Now, for a house, the average price or the median price is $450,000.
Yep.
And the unit being $325,000.
Incredible. And we've been harping on about this for many, many months now, but there's a statistic we've been constantly hammering, the undersupply of 10.8%. Are we starting to see a shift in that? It's now March. I've noticed, Adrian, probably in the last week to two, I've done more appraisals and we've listed more properties. Could that supply start to shift in the next 30 days? Possibly. What we would be encouraging anyone who's listening is if you've got property aspirations to sell in 2020, bring those plans forward and accelerate them, get the home on the market before, I guess, Easter, because in 4 to 6 weeks' time, we could see that late injection of supply of for sale homes coming to market for 2020.
Well and truly.
Excellent. So, Adrian, for our viewers that are tuning in, the share market's taken a bit of a hit over the last few days, obviously, in light of the coronavirus, and potentially some of our viewers' superannuation has been affected by this. But one of the questions we get quite regularly is, why would I look at investing in property, say, versus shares?
Okay, great question. It simply comes down to, Chris, and it's simply risk versus reward.
Yep.
For myself and getting into the self-managed super fund of property,
yep.
It's purely that risk versus reward. It's I guess the concern of waking up one morning and your super's been wiped out with the stock market.
Yep.
Where I know that the property, sure, that the value might decrease a little.
Yes.
However, my rental return will still remain strong.
Yes.
And once again, it simply comes down to risk versus reward.
Absolutely. And it also comes down to, I guess, one's game plan. Like if you're looking for quick success, the share market might be a way to do that. Obviously, the growth in property, albeit quite modest here in South Australia, and I guess if you've got a long-term investment, we're quite youthful, we're a long way off from retiring. Do we put the money into property now and have a long-term game plan? Because it doesn't matter if the market recorrects in 2 or 3 years, because we're looking to buy and hold for the next 15 years.
Yeah, and that really comes down to whether you're buying a property now based on where you see the value of that property going.
Yes.
Or you look at buying a unit which is probably going to have a 1% increase at best.
Yes.
But you're getting a great rent return.
Absolutely. So know your time frame. of your game plan. I've learned in business and in my personal life that play the long-term game and you always come out better from it. But potentially, if you want short-term success, you know, the share market could be a way for doing that. Let's talk about when you got to tip money in, I guess. What's the difference of money in the property market to get into the property market versus the share market?
Yeah, it's based around self-managed super fund. You're going to need about 20% of your own money.
Yep.
So if you're going to buy a $400,000 investment, you will need the $80,000 deposit.
Yes.
However, with shares, you can get started anywhere from realistically from 20,000.
Yep. Okay. So what I'm hearing is property market, you've got to come up with more cash to get into it. Probably that's why it's more of a long-term game that you got to play. Whereas the share market, you can go in with minimal dollar value. It can be eaten up just as quickly, but it might get you a gain just as quickly as well.
Exactly right.
Excellent tip. Adrian, you're doing some stuff in some self-managed super at the moment.
Yeah, so that's probably kicking off in the next couple of weeks. It's
Yep.
at the last final stage. It's taken about 6 months to get it geared up now.
Yep.
And that's purely based around property. Property really excites me. Yeah.
Excellent. So a real key point there is it's taken you nearly 6 months to get the structure and the setup. So for any mums and dads or anyone who's savvy and wants to start investing into property through self-managed superannuation, just allow a time frame, because we do often meet buyers who have this aspiration of buying a property in my super, start looking at property, find things that they like. Then when they do the legwork, they realise, okay, I've got to wait several months before I can actually put myself in a position to buy.
And like you said, people start looking now for the property.
Yep.
As I said, so it's taken me 6 months to get where I am today, and it's realistically, it's probably going to be another month or two before we can actually start looking for that investment property.
What could you share for the viewers out there have been some of the learnings for you when it comes to self-managed super? So maybe talk to us, you know, what banks are readily available to lend against your self-managed fund? How much can you borrow approximately up to?
Yeah, it's not as easy as what I thought it was going to be.
Okay.
That's, I guess the biggest learning that I got out of it. The biggest lesson or tip I can give to you is get a really, really, really good accountant.
Yes.
Simply has saved me so much time and effort and probably heartache to just get quality, sound advice.
Yep.
So that's my biggest tip.
And I guess in terms of lenders, I think there's only a panel of three lenders.
Yeah, four lenders.
Four lenders
at the moment.
Yep.
And at the best at the moment, it's Liberty Finance.
Okay, so they're offering one of the best services, rates and products for self-managed super?
Yes, when I looked a few months ago, it's probably in the low 5%.
Okay, that's not too bad.
Not a great rate.
Yep.
But however, the main lenders are simply not touching self-managed super funds at the moment.
Yeah, absolutely. So, you know, 5% going back a year ago was a pretty good interest rate.
Correct.
But now obviously a rate cut just as recent as yesterday, 0.5%. You're getting interest rates on a typical owner-occupant principal and interest loan at around high 2% now, which is super aggressive. But a real key point there. How much can I approximately borrow from, say, Liberty Finance with my self-managed super? Is it like a 65, 70, 75% lend?
Yeah, Liberty Finance is an 80-20, so
Okay.
20% deposit, and then they factor in, you need the last 2 years of group certificates of
Yes.
what you've put into your super.
Yes.
And also they take in your rental appraisal as well of the percentages you can and can't borrow there.
Beautiful. Well, folks, it's Mad March, a great time of year for our state. The fringe is going on as we speak. We've got Warm Adelaide coming up very shortly. We've got lots of tourism happening in our state, and it is a month where there's a lot of big spend going on. So I guess, Adrian, in light of another rate cut, affordability in the housing market's been the cheapest I can recall in all of my real estate career, coming on 14 years now. What do you see as the signs for the rest of March?
I certainly believe that the quality houses that are presented nicely, they're furnished, or it just in general that presentation is high, they'll be selling pretty quickly.
Definitely. Any properties we're selling, we've got 3 this week that are being repainted, new flooring going in, freshened up. They haven't been touched for about some 7 to 8 years, but we're selling those properties and doing more project management behind the scenes before a property even comes to the market. But when that process is taken right now, we're selling them within 2 weeks, multiple offers. Excellent. Well, thanks for tuning in to Mad Much Local Market Update. I'm Chris, Adrian from Harcourt Sargent. Until the next episode, bye for now.